What is up, everybody? Welcome back to my channel. Today we have a good one in store. I'm going to be talking about a trade that I saw. Unfortunately, I didn't get in. We're still dealing with that, but we're going back to the basics with this one. I'm going to be sharing my thoughts. I'm going to be sharing why this trade was an A+ setup, and we're going to be essentially just talking about this trade and getting back to the basics and essentially just what my A+ setup looks like. And yeah, let's just get right into it. I just want to say cheers. Thank you guys all for being here, and I hope you're enjoying this content, and I hope you love this video because it is going to be a good one. So cheers. All right, so let's just get right into it. I'm going to start on the daily, but I'm not going to take too much time like going over the I'm not going to take too much time. I really want to just dive right into like the trade and the setup and why it was an A+ setup. So we're still going to start on the daily just to kind of give you an idea of what the draw on liquidity was, but we're going to be mainly talking about the trade this morning. So all right, so on the daily, let's just talk about this. So we have been bullish all month, and yes, I would like to see some bearish movement just to fill in this, but we can't go in with the mindset that, hey, because we've been so bullish, we're going to go bearish. No, like we want to see something significant happen in order to change our stance from bullish to bearish. So with that in mind, we have these weekly or these, daily/weekly relative equal highs right here. So this high and this high are relatively equal. This one's like a point lower. So keep this level in mind right here. That is what we're aiming for. And then eventually going into this weekly fair value gap. Again, we have been bullish. We haven't seen a break of market structure on the daily. We had some consolidation, sure, consolidation. We had that trade up, consolidation. Now we're going higher. Again, we haven't really seen a break of market structure. If we are gonna start going lower, I would really like this low to be taken out just because that would be a significant break of market structure for me. This right now though is just kind of been consolidating. So it wouldn't matter if we broke this low or this low or this low. Like I am really looking for this low to be broken and traded into this daily fair value gap before we even are like, okay, we're going to be going lower and aiming for these lows and this inefficiency right here. So with that in mind, we are bullish and we are going to stay bullish until we see a significant drop or a significant break of market structure. But let's just make that clear, we are bullish, so we are going to be going for bullish pricing until otherwise, And I also am a day trader. I don't hold trades for very long. The longest I've held a trade for is like 20 minutes to an hour. So I like trading the sessions, so we can be bearish, but overall we are bullish. So yes, with that in mind, overall we're bullish. We are aiming for these weekly relative equal highs. All right. So again, we'll drop down to the 1 hour. As you can see, we have had some bearish movement this morning. Came down, broke this low. We then had these London session lows that were yet to be broken. But once we did break them, taking out that London session low at 8 a.m. And then we kind of were trading below it, but never taking out this low. So never taking out this low, I was like, okay, we're probably not going to go for these relative equal lows today. Because we haven't taken out this low, we're probably going to want to see some higher price action just due to the weekly high relative equal highs up here, right? So we're bullish. That's kind of what we're going into this with. Perfect. So let's drop down to the 15. All right, on the 15-minute time frame, we had a really nice run during London session, came back up into this fair value gap, and then we traded lower again. We then took out these London session lows, which is actually a really high form of liquidity. So that was awesome to see us take out these lows. Took out these lows, came back up into this 15-minute fair value gap, but then we kind of just like were standing still. Now, I've been watching a lot of ICT content about his core content videos, which I highly recommend watching them. They're very, like, I'm on the first one right now, but he talks about price movements. Essentially, we have consolidation, expansion, retracement, and reversals. So I am going through all of his core content right now, just kind of getting a refresher, learning more, becoming a better trader, all of these things. So I'm really trying to at least do 30 minutes to an hour of studying every day, just to, you know, understand the markets a bit more. But we did have a bit of a retracement move down into this London session low, right? And as you can see, we did trade higher at 9:30, came down, took out the short-term sell-side liquidity with this low right here, but never taking out this low. So right there, I was like, okay, we're probably not going to go lower. We're probably not going to take out these relative equal lows. We then had this break of market structure right here at 10:15. As you can see, this candle right here was the break of market structure at 10:15. And we had this small little order block right here. So it's kind of nice because it's about halfway of this one, but like, look at how perfect this is. So we have this 15-minute order block right here. I extended it. When we go down to the 5-minute time frame, you guys will be amazed. It is also a 5-minute order block. So having this kind of higher time frame understanding that we want to reach higher into those weekly relative equal highs, that's kind of what we're going on. We just want to see if the market's respecting these PD arrays, what the market's doing. But we traded into this higher time frame objective, which was the London session lows, and then we still took out these short-term equal lows down here. So let's drop down to the 5-minute. Perfect. So the 5-minute time frame is where I took my trade, where I would have taken my trade. You know, we're still dealing with taking trades, so getting in the markets. But what I was looking at, I was like, okay, like if we're consolidating right now, we had that nice move lower during London, taking out these London session lows, consolidating. We opened up here on this candle, 9:30, we took out these highs, came down, taking out these short-term sell-side liquidity / relative equal lows, and then we kind of were consolidating again. Now, we were trading into some of this imbalance here, taking out these lows. We then traded higher, small displacement run down here, came back down into this 5-minute fair value gap, and then we had another displacement run, taking out this high right here. I was like, okay, like we're seeing some movement higher. You know, we had this break of market structure with this, and now we have this break of market structure with this. So we're kind of moving higher, right? And we had this displacement run. Like, these candles are really nice, clean, you know, fast candles. We also had some candles here, but I wanted some more confluence. So we had that break of market structure. We came down into this 5-minute fair value gap, but also look at right here. You see this candle right here? I use that as a 5-minute order block, but it is in confluence with the 15-minute order block. And I really want to see, like, hey, we have this 15-minute order block and we have a fair value gap. So right there, that is like a prime entry because we have the 5-minute order block and we have the 5-minute fair value gap. So they're in confluence with each other, right? So seeing that, I was like, okay, like we have our 5-minute fair value gap entry, but it's also in confluence with the 5-minute order block and the 15-minute order block. Plus, we took out our higher time frame area of liquidity, which was the London session lows, and we took out these short-term relative equal lows right here. So all of that, amazing. We have our draw on liquidity, which is the relative equal highs, the weekly relative equal highs, and since we're bullish in the market, we're gonna stay bullish until something otherwise, you know, like something happens. I also only trade the sessions. So my main objective was the current new week opening gap and then these London session relative equal highs up here. So with all of that in mind, right here was our entry. We came down into this 5-minute fair value gap, traded down perfectly. Look at how perfect that is. I mean, that perfect level of retracement down into that 15-minute order block, plus the 5-minute order block. Like that is just here. Let me delete this. And like, look right here. I'll make sure to make it a little bit bigger and brighter. Look at that. So we came down into this 5-minute order block perfectly and traded inside of this 5-minute fair value gap. So my stop loss is well protected underneath this low right here with the 5-point stop loss, and our 10-point take profit is just a little bit above these London session relative equal highs. Yes, we did go into this new week opening gap, and then yes, we have been hitting these buy side targets. So it's been great. I mean, that's what I love my Tuesdays. I don't know what it is about Tuesdays, but Tuesdays are usually pretty good days. So we can see the market traded off of this 5-minute fair value gap, and look at how it stopped right at that new week opening gap. Like that is a perfect stop. I mean, that is just beautiful. Came back down, of course, traded into some of this imbalance here before moving higher into more buy side liquidities. And I wouldn't be surprised if we did hit those weekly high relative equal highs up here. So all in all, it is a beautiful trade. This is like an A+ setup for me. I'm gonna just drop down to the 1 minute. Even though we took our trade on the 5-minute time frame, I'm just gonna show you on the 1 minute what it looks like as well. Perfect. So again, we can see we had some choppiness this morning, you know, kind of back and forth, but then we had multiple breaks of structure on the lower time frame, break of structure, break of structure, break of structure. This would have been our higher time frame break of structure, which we see we did in fact do that. Look at this nice displacement run higher. We have the 5-minute fair value gap right here, but look at this one right here. There's this 1-minute fair value gap right here. We came down, traded into it perfectly with Confluence with that 5-minute order block before moving higher into our London session highs and the new week opening gap. So on the 1 minute too, it does look very nice, taking out that short-term sell side liquidity and then having these breaks in market structure. So beautiful, beautiful trade. A+ setup. Definitely, this is the trades that I'm looking for. This is exactly what I look for every single day. This is my trade. This is my setup. Again, we only trade the session, right? We don't hold trades for very long, so we only do trade the session, but to have that daily drawn liquidity is important, but also like understanding, hey, like we do take profits at our key levels, which is that London session highs, and as you can see, that was played out beautifully. Now, when I'm trading, I only trade the E-mini S&P, right? I only trade the E-mini S&P, but I watch the Nasdaq and the Dow on a separate screen. So I'm kind of always watching, kind of seeing what is happening during like how the markets are moving together, because they are supposed to move in tandem. They're supposed to move together. If they're moving together, you know that it's good. So this morning when we hadn't taken out these highs yet, we hadn't taken out this high yet, I was like, okay, that's good news. We're probably going to want to take those highs out aggressively now, because we were taking the highs out on the ES and also on the Dow. Like, as you can see, the Dow was the leader this morning, taking out these highs well before the ES and the Nasdaq. But I wanted to see this 5-minute fair value gap respected on the Nasdaq, and I wanted to see these highs, these relative equal highs, taken out with some force, and we can see that that has happened. And it was nice to see the ES do it before, so we were like, okay, like we're like the Nasdaq's probably gonna follow, and it did. I mean, we can see as soon as we traded back down into this 5-minute fair value gap one more time, the Nasdaq just traded higher aggressively, taking out these highs aggressively, following the Dow's lead, because the Dow was making highs before, you can see right here, the Dow was making highs before the Nasdaq was even taking out those highs. So that is all good news. That is why I like to watch the Nasdaq and the Dow. But again, I only take trades on the ES. This is my pair. You know, this is the one I trade, and I love trading it. But it's nice to see the Nas and the Dow trade and the ES trade with each other. You know, they're sisters, right? They like doing things together. So yes, this is my trade. Let's go back to the 5 minutes. Again, beautiful, beautiful, beautiful setup. A++. Perfect. Obviously, I'm still working on getting into my trades, but it is nice to see that these trades play out. And when we have our daily bias, we can see, hey, the market's breaking market structure. We're not breaking those lows. We're taking out those sell-side liquidities. It's just in like beautiful harmony. So that is everything from me. I hope you all enjoyed this video. I hope you learned a little bit more about what my trade setup looks like, how I like to execute on these, what I like to wait for, and essentially, yeah, it's just, I hope you found this one insightful, and I will see you all in the next video. So, see you tomorrow, guys. Bye for now.